Let's bring in Joe Tigay, managing partner at Equity Armor Investments. Joe, you want to dabble in the pot stocks? I don't think you have these in your fund, right?
Yeah, it's really interesting. This became, like last week you were mentioning, became one of the new Reddit favorites. A lot of the retail names really piling into this pot stocks, really getting a boost. You mentioned it was at 67, so certainly some room to the upside. But for me, this is just a lot of volatility. It's too hot to touch just in stock. I have to use options to trade it.
It's too hot to touch as a stock. Okay, so that sounds like you're going to be using some volatility, maybe some spreads, perhaps?
Yeah, you know, I was looking at it this morning, looking at a call spread and then making it cheaper to sell a put spread. I actually rethought that. I think it's too risky to even sell a put spread. I'm not interested in that right now. Of course, given the drop this morning, I'm interested in the call spread. I'd like to get back into the name at 35. There was previous support turned into resistance at 45. That's what I'd like to line up. I'd look at the March 35-45 call spread. I can put that on for $2. If we're trading above the 45 at March expiration, it'll turn into $10. So that's the type of risk reward I like. Certainly it can do that, considering it was at 67 last week. So this is the type of trade that I'd look for in this stock. Looking at these movements, you know, using them to my advantage. And again, if we don't trade higher, the only risk I have is $2.
Okay, so you said you don't want to sell a put spread because you think there's still basically, you know, risk for volatility to the downside. So you'd rather approach it still from a bullish perspective, right? But using a call vertical with strikes such that your break even, you know, you do need a big move here. So you're looking for volatility. It's interesting, Joe, because you're betting on a pretty big volatility to the upside, but you're saying that you don't want to you know, have a position that would be exposed if there's big volatility to the downside.
I don't want to be exposed. The reason I was thinking about selling a put spread is that would have made my call spread cheaper. I could effectively get the call spread on for less than $2, probably about 50 cents to put the trade on. However, I'd be collecting 50 cents or paying 50 cents, but I could be losing $10 to the downside if I were to put a trade on like that. I'm not interested in that because, of course, I know that could happen. I don't want to be exposed there. However, I do like the risk reward of putting on $2 and having it turn into $10 to the upside.
Okay. All right. Appreciate it, Joe. Quick trade today. Looking at Tilray ahead of the report. Thank you, sir. Mr. Joe Tigay using options around the earnings. We'll hit it this afternoon and market on close.